I think we're just getting all of our gear set up for this evening. Thank you guys so much for coming into our show tonight. Talk with Angelo live every Thursday, 7 p.m. Central. So you guys should be able to hear me well. We got a lot of exciting things that we're going to be talking about tonight. A lot of good news, got good information this week that's actually coming out with Congress and the government with mortgage lending. So we're talking about that tonight. We're talking about new first-time buyer programs that are coming out in the market that are really, really strong. That's very exciting. So we got a lot of good stuff that is, coming this way, man. 2021 so far is, it's cold right now. If you're in America right now, I don't care where you are, whether you're in Texas or you're, even in Florida, it's cold right now, man. So I don't like the cold weather. So I'm sorry if anyone's watching this from the north. I can't stand the cold weather. It's not my cup of tea. I'm from the south, and I like the warm weather and I like the sun. So, but hopefully it gets warmed up by next week. So I know everyone's just kind of tuning in and coming on tonight. So give everybody a few minutes to come on in. And this is a Talk with Angelo. It's a live show. You can ask any questions that you want. And if you guys, most of you guys that are probably watching, you know what we do. We're a nationwide mortgage lender. We do commercial and residential lending. Been doing this for almost 20 years, guys. We've helped, I can't tell you, hundreds of thousands of people all over the country to get their mortgage funding, from residential to commercial, private money, first-time buyer, FHA, VA. So, this is your chance. Tonight you can ask me questions about lending, about being a loan officer. You can ask a loan officer a question about, whatever, how to get your loan approved, or how much income that loan officers make, loan processors. We're hiring right now great people. We're looking to hire great people. We're a nationwide lender, always looking for great people. Right now, we're actually looking to hire for underwriters, loan processors, loan officer assistants. So if you're a great person, I definitely want to hear from you guys. So thank you guys so much tonight for watching Talk with Angelo. So you guys, you can chat anytime you want if you have questions. Hey Vic, I got land in Florida. Do you have any loans? Yes, we have Vic. That's Vic in Florida. Hey Vic, what's up, buddy? We have loans. We do construction loans either with our builder. One of our builders can build a home for you on your land, Vic. Or you can go and get a construction loan from your bank, and then we can give you a permanent loan either through the USDA or conventional or FHA loan. So there's a few different ways on how to do it. Generally, how most people do it is they'll get a loan from a construction loan from their bank. They'll ask us as the permanent lender to give them the permanent loan, and then once you close on the construction loan, we pay off your bank, and then we give you the permanent loan. A lot of times the construction lender wants to make sure that the bank loan has been approved before they do the construction loan. You got to get an approved builder, and then they'll come and build on your lot based on our construction loan. And that's a great way to do it. So another way you can do it is you can have a builder build at their expense on your property, and then they do the construction loan, and then once the home is done, completed, we'll pay off the builder. We have many of those type of deals going on right now. If you own the lot, the builder can build on your home, and then once he's done, we'll pay him off. We have a ton of deals all over the country like that that are going on right now. So that's a great question, Vic. And you guys, if you have any questions, you can ask me questions anytime, and I'll respond. And I'll be very open and transparent to you about questions, whether it's how much loan officers make. Vic, you have 1099s. Yes, you can still get the loan if you have 1099s, but we may need to see tax returns. Do you have tax returns, Vic? Because they may want, if you want to get a low interest rate loan, then they're going to want to see tax returns. We just need 1 year of tax returns if you're self-employed. Guys, we have a special, okay, that's good, Vic. We have a special program for self-employed, 1 year tax returns, where you just need to show tax returns for 1 year. You don't need 2 years with us. If you've been self-employed for 5 years, We have a 1-year self-employed tax return program, and you can get an awesome smoking low interest rate. Interest rates like low as 2.83%, only 5% down, starting with 5% down. 1-year tax return, guys. Very, very powerful, strong program. Most banks, most lenders require 2 years of tax returns. We just need 1 year. Okay, that's a really, really cool program. And like I was saying earlier, guys, so far this year is shaping out to look really, really good for home buyers, for real estate. Okay, President Biden just said that he's looking to lower the FHA mortgage insurance premiums by 25 basis points. That's very, very strong. Hey, Chris, how long can I use my... Hey, this is Christopher Duncan. Hey, Chris, how long can I use my 2019 tax return? Okay, Chris, great question. You can use your 2019 tax return until October of 2021. If you file an extension for 2020, you can file your extension through October of 2021. We can still use your 2019 tax return. Okay? But if your 2020 looks better, like for example on the 1-year tax return program, then we'll just use your 2020. Or you can use your 2019 tax return and then file for an extension for 2020. So you have that option in the event that you need to use your 2019 tax return. We also have a conventional first-time buyer program with only 3% down, guys. So we have a nationwide conventional first-time buyer. It's not FHA, it's conventional, and you just need 3% down, and you can buy nationwide, and you can get closing cost assistance up to 3% for our conventional home loan program. So that's a really, really cool program because most conventional lenders, they require 20% down. Some do 10% down. Hey, Donna, what's up? Hey, are you still doing... Yes, we do no doc loans, Donna, all over the country. Hey, Valerie Love. Hey, Valerie, should I put more money down on a home? Okay, we do, Donna, we do no doc loans. Yes, our no doc loans start with 10% down, and they go up from there. We lend nationwide on those, owner-occupied or investment. Valerie, yeah, so I would say, I have to look at your file. That's a great question. You asked, should you put more money down on the loan or should you pay off your car? I think every household, every family is different. Okay, and I even contemplated this with my wife the other day. We're looking at buying another property, and I said, hey, babe, should we put more money down on the loan or should we save our money? I'm the kind of guy, I like to have my cash. I don't like to have my money tied up in the house. That's me. Okay? Yeah, Donna, I mean, the thing that I don't like to have all my money tied up in the house because I'm a business owner, and I need to have my money working for me. And if all my money's tied up in the house and something bad happens, like a COVID thing, I'm screwed, and I don't want that to happen to me. So I don't like to tie up a lot of money. Now, a lot of people are different. Some people are like, no, I don't want to finance a loan. I don't want debt. I don't want to take on debt. It's too much. And then they want to put a big down payment. And there's people like that. So I've been self-employed my whole life. And so I just, my business does really well. It's just that, you never know what's going to happen in the future. So I think you got to look at your household and see where you're at and what's important to you. I always think cash is king, and I like to have a lot of money on me. I don't like to walk around with, a little bit of money because I get nervous if that happens because you don't know what's going to happen. The days we're in now, and I'm a very optimistic person. I'm not negative. I believe in the future in America and believe in great things that are happening here. This is the best country to be in. There's a lot of beautiful things, beautiful people. Hey, Chris, what's up? Okay, debt to income ratio for 3% down conventional. Okay, great questions, Chris. You seem like a smart guy. So, okay, yes. Under 10 car payments, Valerie, you can omit the car payment. That's true. If you have under 10 car payments on your car, you can omit an installment loan. That's true. So that means if you have less than 10 payments to make, you can omit the payment into your debt ratio. Chris, on your question, the 3% down conventional, 40% max debt ratio, 1-year tax return up to 45% debt ratio. Yes, student loans are being calculated into the debt to income ratio. They are. So, but the deal is, let me talk about student loans. So that's a big thing that you're bringing up. And I'm having to keep adjust this thing. So I want to make sure I can stay focused with you guys on the camera. So student loans for conventional loans, if you can get a deferment for 1 year from closing, okay. Hey, Troy, what's up, man? You're LO? I'm looking for good LOs. So if you're a hustler and you're hungry, I want to hear from you, bud. We're looking to hire great LOs. Reach out to me. Send me your resume, buddy. But on student loans, guys, conventional, if you get them deferred for 1 year from closing, they don't have to go into the debt ratio. Or you can go into a fixed, an income-based repayment plan. If you go into an income-based repayment plan for conventional, I can just take the quote that the student loan provider gives you. Let's say it's $20 a month. I can use that quote from your student loan provider. Now, FHA, they're either FHA or USDA, they're going to do 1% of. Monica Allen, you said, when does the construction loan in Texas? Yes, we do construction loans in Texas. Because we're a Texas lender, we'll do a construction loan in Texas. So reach out to me if you want to get a construction loan. We can help you for construction financing in Texas. Preferably in urban areas, Monica. If it's in urban, Austin, San Antonio, Dallas, Houston, those are our key spots to construction loans in Texas. But on the student loans, on government loans, FHA and USDA, they take 1% of the balance on your student loans and they multiply that. So if you have $100,000 in student loans, they multiply that by 1%. That's $1,000 a month that goes into your debt ratio. Or the other option you can do is do an extended fixed payment plan. If you do an extended fixed payment plan, they'll amortize it over 25 to 30 years. And then whatever that monthly payment is, they'll put that into your debt ratio. I highly recommend that you do that versus the 1% because it's gonna eat up your debt ratio too much. So get a quote from your provider for the extended fixed payment plan, and that'll lower your debt ratio big time. I highly recommend if you're doing a government loan. If you do conventional, just get an income-based payment plan, much better, or a deferment for 1 year from closing. So those are great questions, guys. Really, really good. But like I was saying earlier, okay, President Biden just announced that he's going to possibly Chris, if a student loan, do I need to consider them for DTI even though they are in deferment? No, you don't. Chris, that's what I'm telling you. If you're doing a conventional loan, you have to get them deferred for at least 1 year from closing. If you get them deferred for at least 1 year from closing or past, then you don't have to add them into the debt ratio. But it has to be 1 year from the closing date. So if you're closing in April of 2022, April of 2021, your deferment has to be from April to 2022, 1 year of deferment to omit that from the debt ratio. Okay? But that's only for conventional. On government loans, guys, FHA and USDA, even if you have a COVID deferment, FHA and USDA, they don't care about that, unfortunately. And that's not my rules. That's a USDA and FHA deal. Okay, those are not my rules. We have to follow what the government says. And if you're doing an FHA loan, even if you're in a COVID deferment, they don't care. They're gonna. Edward Bokey, hey, can I qualify for FHA and some months' tax returns? Okay, Edward. Okay, man, I wish, bud. Edward, I wish you could. Now you have to have 2 years of income for FHA. You don't have to be at the same job for 2 years. But you have to show me 2 years of income for FHA. Now, conventional, I could do that with conventional for 1 year. Okay? But FHA, you have to have 2 years of W-2s, 2 years of either pay stubs or tax returns or something. Now, if you were in school, okay, or you had an injury or you were incarcerated or something happened to you and you weren't able to work, and then now you're back to work, I can give you credit for those things. Okay, so and this goes very deep into FHA guidelines, guys, because it just depends on, I did a loan for a gentleman the other day. He was incarcerated for 2 years, and he's back to work for a year. He's trying to provide for his family, and prior to him going to jail, he was working for 4 years, and we took all that 4-year work history plus his current work history and added it all together to get him approved for his loan. People that just got out of school. If you just got out of school, I can take your college diploma, your transcript, and you can get a new job today. We can help you with that. Edward, hey, I have 2 years, but first year is a combination of 2 jobs. That's okay. That's okay, Edward. As long as you have the 2 years of work history, we can work with that. And you can actually, with us, if you have 2 jobs, I can give you credit for both jobs if you've been at both jobs for at least a year. Okay, so let me say that again. If you have 2 jobs and you have been at both jobs for at least 1 year, I can give you credit for both jobs. So don't worry. Hey, Monica, does the construction loan to be refinanced to FHA? Okay, Monica, good question. You're smart. I like that. So, no, Monica, once the construction loan is done, we can refinance into any product. You can go to conventional, you can go to FHA, you can go maybe USDA, depending on where you're located. You can do a private loan. But yeah, the loan does have to be refinanced because, see, a construction loan is not the same thing as a permanent loan. Okay, guys? A construction loan just gives you the money to build the house. It's a 1-year loan. So a construction lender, a construction bank will just give you the loan to build the house. You can't stay on that loan forever. It's not a 30-year, 15-year fully amortized loan. It's a 1-year loan. So you have to get off to another loan, either conventional, FHA, private, USDA. If you're a veteran, you can do a VA loan, but you got to move it on to something else. You can't stay on that loan program. Okay? Great question, though. That was a good, because, yeah, I mean, some people think that a construction loan, you can stay on it for 30 years. You can't do that. There's no construction loan for 30 years. It's a short-term loan. The construction lenders like to be paid off quickly, and that's just how their business is. So, Valerie Love, what is a typical down payment for a conventional loan? Great question, Valerie. So, like I said, with us, we do conventional loans starting with 3% down. So you can go from 3% down, 5% down, 10% down, 20% down. It just depends on what your comfort spot is, how much cash you got, and where you want your payment to be. Okay, so it really just depends on you what you want to do. So on a construction loan and a conventional loan. So, but like I was saying earlier, I want to go back to what I was saying. We got some good news with Biden. Biden is saying he's going to lower the FHA premiums by 0.25. So that means that your payments. You're welcome, Valerie. Thank you for watching the show. FHA is going to get better, guys. The credit scores have gone lower to qualify. Biden's lowering their mortgage insurance premiums. Troy Atkinson's one-time closed construction. Yes, that's a great question. So one-time closed construction used to be offered a lot before COVID. And we're hoping that program comes back. Now, you might be able to get a one-time closed construction loan from your bank. If you can do that, I would highly recommend to get a one-time closed construction loan from your bank. They're probably going to want 20% down, guys. But, if you can get it done, go for it. A lot of lenders are not doing one-time closed construction right now. If you can get it done, go for it. The other option is to do the two-time closed construction, where you do the interim construction, the financing, and then you go to a permanent loan after. So that would be another solution that you could do to get your house built. But if you're here in Houston, for example, we can give you the construction loan. We also have a construction company here in Houston, and we can build your house for you here in Houston if you're trying to get a home built here in the Houston area, the greater Houston area. So remember, you can always call or text our office at 832-431-6331, or you can go on the link. You're welcome, Monica. You can go on the link in the YouTube description. You can get signed up there to get pre-approved. Guys, we've been actively lending in America for 20 years. It's where America goes for funding. You're welcome, Edward. Thank you for watching the show. You can call or text us. We're a nationwide commercial and residential lender. The only state that we don't do owner-occupied in is Maryland, but every other state, Hawaii, Kentucky, Florida, Texas, okay, New York, New Jersey, Delaware, Connecticut. We lend in all those states, guys, California. So we want to help you guys to get you the funding that you need. We have all kinds of awesome programs. We do FHA, VA, USDA, conventional, jumbo, HELOCs, hard money, no doc, lines of credit for investors, fix and flip. We do all different types of funding to help you guys out there. SBA, SBA 504, SBA 7A, all these different type of loan programs that we offer with our company. And we really, the biggest thing, hey, Troy, Old Countrywide did them, but yeah, Old Countrywide, you're right. You're right, Troy, you're right. Countrywide used to do all kinds of loans. They were crazy, man. What is the credit score for 3% down? Okay, Donna, great questions, Donna. Donna's asking, what is the credit score requirement for conventional 3% down? You got to have at least like a 680, 700 credit score for conventional 3% down. No doc loans, you have to have at least a 680 credit score. I'm going to tell you guys something right now. Credit matters. All right? Credit's important. If you have a high credit score, you can go really far with loans. Good evening. Hey, Kevin, what's up, buddy? How you doing? I love Florida. Yeah, we have offices in Florida, offices in Miami, Orlando, Wesley Chapel, Tampa, Fort Lauderdale, West Palm. Love Florida, man. Florida's a cool place. So hope you guys are doing. I hope the weather's not too bad over there tonight. So it's a little cold here in Houston. I don't like the cold weather, man. So, but anyway, yeah. So the thing that we offer all these different type of loan programs. I'm hoping after COVID eases, the vaccine kicks in, we'll go back to doing more construction. I love construction loans. I think they're great. It helps people build their home the way they want to. Inventory is very low right now in a lot of states, and you can build, buy your lot, build your own home. It's an awesome idea. It's just that you got to get the investors, the marketplace to warm back up to it. So, but yeah, I mean, the other thing that I don't know if you guys saw this week that FHA, they're talking about extending their forbearance to 6 more months. So if you guys have a current FHA mortgage right now, they're talking about extending that forbearance period for another 6 months. That means you won't have to make any payments for another 6 months. Now, while that sounds good on the surface, the one thing I want to remind you guys, if you're in a COVID mortgage forbearance right now, you're not going to be able to get a new loan from another lender. All right? They're going to make you get out of the COVID forbearance before you can get a new loan. Now, I know it sounds really good that you want to be, you want to, not have to make any payments for 6 months, but you're not going to be able to get another loan until you get out of it. So there are repercussions or side effects that you'd have to get out of that COVID forbearance before another lender can give you another loan. So just be mindful of that, because FHA came out this week and said they're looking at extending the forbearance period for another 6 months. So that's cool. Just know that if you try to get a new loan, you're going to have to get out of that before we can close on your new loan. Okay, so that's an important thing. Also, for self-employed people, our bank statement program, we went down to a 640 credit score this week. So now you just need a 640 credit score to get a bank statement loan. So that's really, really cool. Before you used to have a 660. So the guidelines are lightening up, guys. They're getting better and better and better for us. So that way we can make more and more loans to everybody. You just need a 640 credit score for a bank statement loan. On a bank statement self-employed loan, you don't have to have tax returns. You just have to have the last 12 months of your bank statements, and then you can get approved for a self-employed no-doc loan. And we can go up to a $3 million loan amount. So you can buy, if you're self-employed and you can't verify your income with tax returns, just use the bank statements. You just need the last 12 months of bank statements, and then we can get you approved for a bank statement program. And then those start with, now the bank statement program starts with 10% down. If you have a 700 plus credit, at 640 credit, you have to have 20% down, but still no PMI. Low interest rates. Interest rates started in the 4% range, and a 30-year fixed loan with no tax returns required. So it's a great program if you're self-employed. You can't verify your income. Hey, Monica. Yes, it's cold. Oh, you're here in Houston too. Yeah, I know you like the cold. I don't like the cold. Yeah, it's I need that warm weather back. I'm waiting to go. We got to go to the beach. Yeah, we should all go to the beach and hang out. So that's what I'm waiting for. Is once all this COVID stuff ends, we're gonna have a big office party and invite all you guys to come out. We can all hang out. I used to love doing big office parties and get-togethers, so I'm looking forward to doing that again. So hopefully this is the last year of all this isolation, and we can get back to some normalcy. I'm excited for that. So I'm excited about the future. I'm optimistic. Interest rates are really low right now, guys. You can get 30-year fixed loans as low as 2.5%. For the first time ever, interest rates at rock bottoms. There's a lot of programs right now for first-time buyers with closing cost assistance up to $10,000. So we can help you to boost up your credit score. Another thing what's really strong about us, and that's what I was saying earlier, guys, life is not certain. We don't know what's going to happen tomorrow. We saw 2020 was a crazy year. All right, but one thing I want you guys to know with us, all right, we are for sure. We are certain. Rapid City, South Dakota. Hey, Troy, my mother's actually from Brookings, South Dakota, and I have family in Sioux Falls. Know the area very well. What if my wife has Zion's, what if my wife has regular income with W-2 and I need bank statements? Yes, great question, Zion's. Yes. Yes, we can do bank statements with W-2s. We can add both of them together. Yeah, we do that all the time. I had a guy, I mean, matter of fact, today we had probably 20 clients like that, where one of the spouses is bank statement self-employed, and then the other wife or the husband is W-2 at a job. We can give you credit for both of them. We'll use your bank statements to qualify you, and we'll use her pay stubs to qualify her. So we can definitely use both of them. That's really strong, because not a lot of lenders will do that. Okay, it will take the higher credit score of the two of you for the main income earner. So like most lenders, they take the lower credit score. We'll take the higher FICO score for the main income earner to get you a lower interest rate. So that's a really, really strong program. Okay, so but yeah, the thing I was trying to say earlier, guys, a lot of lenders, if you don't meet the qualifications, they kick you to the curb. If you don't have a 750 credit score and 20% down, they don't want to do business with you. If you have one little thing wrong with your credit, your income, they won't return your phone calls. We don't act like that. We don't operate like that. We're going to do everything that we can to figure out how to help you to get you. Yes, Zons, I told you it's great, man. Call me, man. 832-431-633. We want to hook you up, get you funded. All right, we'll get you a loan, bro. So, no, I don't like the cold. Yes, I don't like it either. Please give us warm weather in Houston. So, but yes, that's how we're different, okay? We're here for you to help you to make sure that you can get your loan, that you can buy your house or refinance with confidence to make sure that you can get your loan funded. You can call or text my office. You can go to my mobile app, official Angelo Christian. You can click on my mobile app. It's on the YouTube channel. We'll get you signed up. We'll get you pre-approved. We'll help you to get you the best funding that you can get for your home loan. All right? Like I said, you don't know what's going to happen in the world. You don't know what's going to happen tomorrow, but you know that we're going to be here for you. We're open 7 days a week for you guys. Johnny Thunderbass, talked to you today on the phone. Good to see you. Hardest working man in the business. Yes, thank you, Johnny. And I'm going to help you to get your VA loan, brother. Okay? I appreciate you calling out and reaching out to me. We're here to help you guys. That's what we're going to do. We'll figure out. Listen, this is one thing I'll promise you, my promise, that if I can't get your loan done, no one else can get it done. All right, I feel very confident that I can say that after 20 years, if I can't get the loan done, there's no one else that can get it done. So so that means a lot. So if you call me and I told you I can figure out how to get it done, then it'll happen. All right. So Zion said, would she need 2 years on the job? She has 1 year as a manager. Well, so she doesn't have to have 2 years at that job. Okay. So she doesn't have to have 2 years at one job. All right. She has to have a 2-year work history or school history, or if she was out on maternity leave, or she was out of work from an illness. But we have to have a 2-year history to paint a picture. Okay. Like when you're getting a loan and someone's trying to buy a house, you have to show for 2 years like what happened with that person. Were they unemployed? But they were working before? Were they in school? Did they have an illness? Was there extenuating circumstance? Was there something with medical? You have to show a 2-year. So you don't have to be 2 years at the same job. 15% down. No, Donna, a bank statement right now is 10% down. Starting 10% down, and then it goes up from there on the bank statement program. It can be 15% down, but it starts with 10% down. But it can go up to 15% down, just depending on your credit and your file. But the key thing on this, the 2-year history, a lot of people get hung up and they think they have to be 2 years at the same job. You don't have to have 2 years at this. Okay, 740 credit, 10% down, Donna. 10% down with 740 credit score on the bank statement program. You have to have 10%. All right, yes, ma'am. 10% is the minimum down payment with 740 FICO. But the thing I was trying to say earlier, you don't have to have. We do loans for people that just get an offer letter today, and they get an offer letter today, and then they start with their new employer. We get them approved all the time. So you don't have to have a 2-year history at one job, but you do have to have either 2 years of schooling or work or something that we have to show that you've been doing something for 2 years. Where it's going to be really hard to get your loan is if you have 2 years and you can't show anything. right? Well, I just started working a month ago, and I've never worked in my whole life. That's going to be, and I never went to school. Then that's not going to work unless you did a private no doc loan. If you did a private no doc loan and you put 25% down, then you could do it that way. Private no doc loans, they don't get into income or employment or income verification, so you could do that. Okay, so that is an option that you could do if you can't verify your income, or you don't have a 2-year history. But don't get so hung up on the 2 years. You got to be very open and honest with your lender, and provided they're a good lender, and they're going to figure out how to help you to get your loan through. Most some lenders are really good, and they're going to figure out how to help you to get your problem solved. Not every lender is the same, guys. You can't think that every lender is there. Yes, Donna, we are a direct lender. Yeah, we are a direct lender, Donna. Great question. Yes, we are a direct lender. We make the decision for the loan processing, the underwriting, the funding. It's all within our company. Okay, so great question. Yeah, because now that's another. You're welcome, Zions. Thank you. That's a great question you brought up. So there's a difference between a mortgage broker and a mortgage lender. So the mortgage broker, as you guys may or may not know, doesn't fund his own capital. He's a middleman or a third party to help you to find the best lender for your file, and he gets paid a finder's fee, to help to close your loan. But he doesn't have his own money or his own capital. He's brokering that out to a lender. All right, and there's nothing wrong with that. It's just that he's not the decision maker. He could be very good at what he does and very skilled, but he's not the actual lender, so he doesn't make the final decision. He doesn't have in-house underwriting or in-house processing. Whereas a mortgage lender, someone that's the actual lender on the file, they have their own internal processing, their own internal underwriting, and their own capital to make that loan. Now, it doesn't make it that they're a better person, but they could have more speed on your loan process and faster to make a loan decision to get you approved, and they could be less costly because there's no third party, so the terms could be a little bit better. So, and there's nothing wrong with working with a mortgage broker. It's just understanding what you're working with, because not everyone's the same. There's credit unions, there's banks, there's depositories, there's mortgage lenders, there's mortgage brokers, and you got to know who you're working with, right? Because it makes a difference on the type of loan that you're going to get. The other thing too is that a lot of these lenders, they don't specialize in all the different loan programs. Andy Zoe, what do you think will happen in the housing market? Great question, Andy. Andy, that's a great question. I like that question, and I see that. What if the collection accounts on the credit report will hamper the process? Okay, I'm going to answer your question first, Andy. So, I think in 2021 that we're going to stay, depending on what happens with COVID and the vaccine, that it's going to be somewhat stable. I will tell you that it's a seller's market. I don't know where you are, Andy, but every realtor and broker I talk to, it's a seller's market, man. You have multiple offer situations, people paying 5 and 10%, 20% over list, waiving all contingencies. And I'm not saying that's so much of a good thing, because it does make me a little nervous because we have very low inventory. And people are going crazy to buy houses right now. So I am a little nervous about that. But a lot of other things can be contingent on the government and everything. It's a tough question, man. I think you definitely need to hold on to as much cash as you can. The thing is, you don't know for sure what's going to happen in the future. I'm optimistic, but I think you have to be realistic too, right? You have to kind of see what's going on. I wouldn't go crazy and blow your wad. Thank you, Ange Haas. Appreciate you watching the show. That means a lot to me. Thank you so much for watching. We really appreciate you tuning in. Okay, on collections, someone asked, you're great. Well, thank you, Troy. Appreciate you, brother. Appreciate you, man. On collections, yes, they do matter, guys. If you have collections on your credit, the way it works is, and guys, this credit thing, we help our clients with credit repair. It's important. High credit score is important. And again, I'm not we have loans that we help people to 580 credit, 550, 600, and we try to help you to get your score up. Okay, collections. If you're doing a government loan and you have non-medical collections and you have over $2,000 of non-medical collections, the underwriter is going to put that into your debt ratio. If you're doing a conventional loan, you're probably going to have to pay off those collections. If you're doing a private non-QM loan, yes, we can help you with the credit repair, SH. Just reach out to us. We do credit repair for our clients. On private loans, they're even getting stricter on collections. So what I would say, you can either have a collection credit repair company help you to delete the collections. You're welcome, SH. Thank you. You can, the only way that you can get around collections if they're non-medical. If they're medical. If you have medical collections, that's okay, right? So medical, no one really makes a big deal about it. You can kind of get through with that. Now, it may affect your credit score, but those aren't too bad. But charge-offs are different than collections. A charge-off is when the creditor actually... Okay, charge-off is fine, Edward. In fact, on government loans, charge-offs they're not counted against you. Okay, conventional loans, underwriters don't like charge-offs, but government loans, charge-offs, they're not really counted against you. They're omitted. If you settle them, try to get them deleted. Try to get that deleted off your credit to have your score go up. Usually, if you do offer and compromise and do a settle, pay for delete to help get that off your credit report. Yeah, it's a very smart thing to do. So, highly recommend. Is my shirt? I think my shirt's okay. Yeah. All right. So. But collections, they're if they're medical, they can be worked around. But if they're non-medical, it's if they're small, like 1,000 or 500, that's okay. But if they're big, 10,000, 15,000, 20,000, it's going to be tough. It's going to be tough to kind of close. Now, I'm not saying we can't get you a loan. We can still get you a loan, but they may put that into your debt ratio, is what I'm trying to tell you. Okay, so if you have a $10,000 medical collection, Mark Wentworth just sold the house, went and bought rental pieces and crazy, and suggestions for short-term rentals. Okay, Mark, I saw your email that I saw something about doing short-term rentals. Are you talking about Airbnb, Mark? Is that what you're saying? Yeah, I mean, depending on what you're trying to do, Airbnb. That kind of got hit a little bit with COVID. Now, a lot of the Airbnb guys I talk to say they're still doing good. I don't know. The thing is that I think that, and I know a lot of people right now in the multifamily space doing B and C class, and they're hurting right now. One of my good friends, he owns about 300 doors, and he has like a 12% occupancy right now. And so I think that, if you can this is what I'll tell you, Mark, if you can get a great deal on the property, it's good. A lot of equity, or they're gonna cut the price low for you, but don't pay a crazy price for it, man, and make sure it's in a very good location. A metropolitan area, resort area. A lot of people buy near Disney and Kissimmee and Orlando. That's a great area, because even through COVID, people are still gonna come back to that area. Apartments are over $3,000 per month for a short term. Yeah. It depends on where you're looking at, Mark. I mean, I don't know where you're at. I think, Austin's a great market. Austin, Texas is really good. Orange County in California is really good. Orange County. San Diego, La Jolla area is really good. I just think that, Texas is a great state. Texas is I think Texas is going to be one of the best areas to invest in the future. I think Texas has one of the best bangs for your buck, best dollar value. Texas and Florida, I mean, in my opinion, are my two favorite states. I love Texas and Florida. Now, I'm not saying that another area that a lot of investors invest in is Ohio. So I don't know if any of you guys watching this, a lot of investors are putting their money in Ohio right now for real estate, multifamily and single family. So check out Ohio, guys. A lot of my clients invest in Ohio. I do a ton of loans in Ohio. It's been a hot market for investors. But the thing is that I just think you need to be smart, right? Don't overpay. get a good deal. Thanks, Chris. Appreciate you, man. Awesome. Thank you. Thank you, Awesome. Appreciate Awesome. Thank you, buddy, for watching the show. Appreciate you for checking us out. So, oh, you're in Arizona. Oh, Arizona's awesome. Arizona's awesome. Love your YouTube channel. Question: I'm renting now, but my lease ends in July. What do you suggest? Okay, great question. Planning to buy in Ohio. Good, Edward. Yeah, Ohio's a great area to invest. Yeah, call or text me. We do all kinds of loans in Ohio. No doc loans, investor loans. Call or text me. Okay, your question was you're looking to your lease is up. You want to get ready to buy in July. One of the biggest and most important things I think is very important. Thank you, Monica. I appreciate you for watching. Yeah, and our office is here in City Center in Town and Country. Come see me one day. Give me a hug. So, Andy, hey, what's up, man? How you doing? How do you come up with the jumbo loan programs? Andy, you know how we come up with jumbo loan programs, man. What kind of jumbo loan you want? We're hooking you up, right? So we're doing we have all different types of jumbo loan programs. So tell me there's two questions. The first question I want to go back and answer is how do you get ready to get pre-approved if your lease is up? If your lease is up and you're going to be purchasing in July, now is the time to get started. Okay, now is the time to get the process started to get pre-approved. You got to meet with your lender, call or text me. You need at least minimum 3 months preparation to get ready for I recommend 6 months preparation with your lender before you buy a house. Okay, do not apply last minute and then the next day you want to go buy a house. That's bad. Don't do that. Okay, that's not smart. You need at least 6 months to get your credit, get your money, get your bank account, all your finances, everything in order. I talk about that all the time on my show. Is that one of the most important things is to make sure that you get prepared. Preparation is key when getting a home loan. Get your credit right, get your money right, get your bank account right, get your debt ratio right, everything. So when you go into underwriting, your loan goes right through. If you don't have your money and credit right, guys, and you're trying to get a loan, the underwriter is going to tear your file apart. All right? And it's not me, guys. We have an underwriter. I can't make the underwriter be nice and give you less conditions. Okay? You got to make sure that we get that credit as high as possible. All right? You get your debt ratio as low as possible. Get your bank account with a lot of money in there. No charge-offs, no NSFs, no collections. You got to be squeaky clean. Now, I'm not saying before you apply with me. Okay, what are your thoughts on subject to property? I'm going to answer that, Ashraf, for you. But I'm not saying before you apply with us that you're squeaky clean. I'm saying call me to get you ready to be squeaky clean for the underwriter. Okay? I'm going to help you to get your loan closed. I'm going to tell you what you have to do and walk you through the process and guide you to make sure. So that's my answer to you. If your lease is up and you're looking to buy in July, you need to call me now to get the process started. No, Andy, USDA is not for just first-time buyers. You do not have to be a first-time buyer for USDA. It's for existing people that have owned homes before, or a first-time buyer, or a current homeowner. The only thing with USDA is that you can only have owned one home at a time. So unless you got transferred, and then you kept your current home, and now you're transferred to your new home, then you can have two properties. But if you haven't been transferred, the other thing, I was in Texas from 7984, FM 1960 in Kirkendall. Yeah, that's not too far from me, man. 1960 in Kirkendall is not too far. Yeah, come see me, Monica. Come see me. So, but USDA, you can be a current owner, but ideally they like you to sell your current home or not have a home on the books. If you're living in a house that has been condemned or you can't live there anymore, or you've been transferred, and you can have a second home with the USDA. Now, Andy, going to your question on jumbo loans, we have all different types of jumbo loans. We have jumbo loans up to $2 million with 10% down. You have to have a 740 credit score for that program, and your debt ratio. I mean, and I know that I told you this before. You know, they want it to be 30% on the front end, 40% on the back end. Yes, Ohio, Donna, is a hot market. I agree. We're doing a lot of loans in Ohio. The jumbo loans, guys, they're hot, man. We offer a lot of them. Now, there's a lot of different jumbo. Oh, wow, what's going on? Dennis Scott, I'm in Michigan, born in Ohio. How long does it take loans to do in these states? Loans take about, in Ohio, they take about 30 days to close. depending on the type of loan that you do. Some loans take longer, about 30 days to close though, Dennis, somewhere around there. But Andy, on the jumbo loan, we go up to $2 million with 10% down, $3 million up to 20% down. And depending on where you're at, we can do anywhere from $850 to $1.2 million with 5% down. Now, all these programs have different requirements. Ideally, get your credit score, guys, I'm telling you, get it a 700 or higher. Your middle FICO score, you have 3 credit scores. The higher you get that score, the better. I highly recommend you get that credit score up as high as possible, at least 700 or higher. A lot of these programs, guys, on the jumbos, they want your debt ratio and your back end to be below 40. We could go up to 770 is good. You guys there? Everyone there? Okay, sorry about that. We fell off for a minute. So, Donna, the closing on the no-doc, how many days and weeks? The closing takes about 45 days to do the closing, Donna, on a no-doc loan. Okay? But going back to the jumbo loan, debt ratios, they want to see anywhere from 30 to 40%. On the 10% down jumbo, up to $2 million, we can go up to 45%. But you want to keep your debt ratio as low as possible. And then you want to have at least 6 months of reserves, guys, for the jumbo loans. So those are the key questions on jumbo. Yes, Andy, you need reserves. Ideally up to 6 months of reserves for jumbo. I'm sorry, I missed a question there. Something about real estate. I missed that question. I apologize about that. So, Andy, you're going to need at least 6 months of reserves for jumbo. I mean, this is the thing, guys. The bank's going to give you the loan, let's just say $2 million, $1.5 million. They want to make sure that, yes, LLC, we definitely work with LLC. How about DACA? Yes, DACA is back. Giorgio Levench, I'm sorry if I'm messing up. Giorgio Levecchio. Yes, we do FHA DACA. FHA DACA, we do that. Call me, 832-431-6331. That program is back and we can help you with that, guys. Sorry you were paused. Should I take my student loans out of deferment? No, keep them in deferment. Sorry, Ben. No, you want to keep them in deferment because that'll omit you from the... You're welcome, Monica. You want to keep your student loans in deferment because we can take that out of your debt ratio. Okay? Yeah, because if you have a lot of student loans, like I have a doctor that I'm closing on her loan. She has $500,000 in student loans, but she has them deferred because she wouldn't qualify for the loan because $500,000 is like $5,000 a month on student loan payments. So I had her go get them all deferred for a year so that way we could close on her loan. So that's what I'd recommend. So if you're doing a conventional loan, get them deferred for a year or go into an income-based repayment plan so that way we can omit them out of your debt ratio. Very, very important thing to do because that way you don't want to get hit with that in your debt ratio. Could you imagine if you have $500,000 of student loans, you wouldn't be able to, most people wouldn't be able to get a mortgage. So, but you have to get it, omitted or deferred. So, but yeah, going back to you don't have to factor student loans for conventional. That's what I've been saying. For conventional loans, if you get them deferred or you get income-based... Now student loans for jumbo, yes, that we can do the same. The same rules apply. That's a great question, Andy. For us, the same rules apply. Either get a deferment for a year. It has to be from 1 year from the closing date. Get them deferred from 1 year from the closing date. Or income-based payment plan. And that has to report onto your credit. Is the best thing that you can do. The only time that they'll do the 1% multiplier against your debt on your student loans is if you do a government loan like FHA or USDA. Okay? So you're welcome, Donna. Thank you. So what else? The other thing about jumbo loans, they're great. If you guys are looking to jump, we have an awesome program. We have an awesome program, guys, jumbo with a line of credit. Okay? We're one of the only lenders in the United States that will give you a jumbo loan with a line of credit with $250,000. Now that line of credit is like a credit card. So if you're buying $1 million house, all right. Hey David, what's up, man? How you doing, buddy? Thank you for coming on tonight. Thank you so much, David. But we're the only lenders in the country, guys, that will give you a jumbo loan with a $250,000 line of credit. That line of credit's interest only. The interest rates start at 4.25% interest. There's no PMI. And you can use that line of credit. Fire, I love that fire, David. Thank you, man. You can use that line of credit like a credit card for purchases, investments, and that way you don't have to put 20% down. And we offer that jumbo program nationwide, guys. In all state. Now the only state we don't do the jumbo HELOC is in Maryland. But if you're in New York, New Jersey, Delaware, Connecticut, California, Florida, jumbo program. Gerald, can you tell me the best way to get started being a loan officer? Great question, Gerald. Best way to get started to be a loan officer is go to Real Estate University, my university course. Get signed up right there at Real Estate University. Okay, and I'm looking to hire great people. Like I said at the beginning of the show, I'm hiring loan officers, underwriters, loan processors for our company. So go there. Do the reserves have to be in the bank? Okay, great question, Andy. Yes, the reserves have to be in either a retirement account, a brokerage account, a bank account. It can't be cash money or mattress money or hide in your pillowcase. So it's got to be in the bank account or some type of asset-bearing account. Retirement, 401k, something like that, but it's got to be in there, bud. So you have to have the reserves. See, Andy, you're smart. You're getting your loan ready. Credit score for DACA, 640, Giorgio. We got to have a 640 for DACA, my man. And if you don't have a 640, we can help you to get to a 640. Now, remember, with our company, we help with credit to boost up your credit score. So if you don't have a 640 credit score, we can help to get you to 640. And that's your middle credit score. Your middle credit score has to be 640 or higher for the FHA DACA program. Now, ideally, if you get that credit score higher, it's better for you. I want to get your credit as high as we can, 680, 700, as best as we can, okay? So, but loan officer question, start with Real Estate University. My course is only $49 a month. It used to be $200 a month. Now it's only $49. And you can learn how to become a top producer. Then maybe you might come work with me or go work for another company. So, yes, you want everything to go smooth. I agree. Okay, get that credit score up, Andy. Get the reserves. Get your down payment money. Lower down your debt ratio. My gross income, Ben says, was $61,000 IBR student loan. Should I be able to get something? Yeah. Ben, if you make $61,000 of income on FHA, you could go up to about $350,000 on FHA, and then conventional probably about $300,000. Okay, that's what you could do, Ben, on a $61,000 income. Okay, somewhere in there, plus or minus, is what you could qualify for. All right, FHA about $350,000. You're welcome, Ben. How long is the course? The course is as long as you want to make it, Dennis. So no, it's going to be, realistically, you can get Real Estate University done in probably about 3 months. If you hustle and grind, about 3 months on Real Estate University. You know, it's what I used, and I built it. It took me about 2 years to build it. It's over 1,000 hours of content, and you can go in there and study. I mean, you can cancel anytime, but there's no reason. You can, obviously, when you graduate, you're done with the course. But the whole idea is to teach you how to become a top producer, teach you how to make money in the lending business. Did you guys watch the Super Bowl? Did everyone watch the Super Bowl this past Sunday? The Tampa versus Kansas. Did you notice who had the most ads in the Super Bowl? Who had the most ads in the Super Bowl? Was it an insurance company? Was it a pharmaceutical company? No, it was a mortgage company. All right. So the mortgage business, what does that tell you? If the mortgage companies, mortgage companies. So if the mortgage companies spent the most money, how much do you think Quicken spent on those Rocket Mortgage, yeah. How much do you think they spent on the airtime? Probably $10 million to run those little ads, and they're awesome. They're badass ads. They did a great job. But the reason why I bring that up is because the mortgage business is a multi-trillion-dollar industry. Okay, it's a massive, massive industry. Okay, so if you're thinking about getting into this game, it's the game to get into, but you got to know your stuff. You got to be really good. All right, and you got to really, really know your stuff. Have deep, deep knowledge, deep domain expertise about what you do. Okay, and that's why people want to do business. And I'm not saying this to me to toot my own horn, because I spent my whole life studying and trying to get all the best products. Right. So, Giorgio, specifically with DACA recipients, that would become residents. Yes, that's the whole purpose behind DACA, Giorgio. So we can give you a loan. If you are currently not, obviously you're on some type of visa and you're not here as a permanent resident. That's the whole point behind the DACA program with FHA. So yeah, you're good, man. That changed this year too, by the way. Last year it was tough with DACA to get a loan. This year in 2021, they're allowed. See, that's why I spend my time studying all the time. DACA just came out again for helping you guys out there to get a loan. Last year it was hard to get. This year it's better. It's out. DACA's in. So, but my point is that, yeah, if you want to get into the loan officer lending business, it's great. It's a great upside. There's a lot of great industries. The mortgage business is phenomenal. This is what I bet my whole life, except when I was a kid, I was in. Yes, please reach out to us. Do you know anything about the business lending industry? Well, Daryl, I mean, when you say, do I know anything about the lending business, and then you're saying, is that different than mortgage? I mean, mortgage is lending. So what do you mean by, what type of lending are you referring to? Because, hey Shirley, hi Angelo, I received my pre-approval letter from Chase and Brand today. Hey Shirley, what's up, girl? You got your pre-approval letter today? Okay, cool. So your student loans on your file, I don't know. Yes, I can call you and talk to you about your file, but you can put your student loans in deferment. They weren't needed for your loan approval, Shirley. So you can do that, and it's not a bad thing to do, but we didn't require that for your actual loan. Not everybody. Okay. On the student loans, guys, not everybody has to do that. It's only if it's needed to lower your debt ratio. Surely you can put your student loans in deferment. There's nothing wrong with doing that, okay, hon? But you got to remember, it's a year out from the closing date. So if you're not closing for a while, then let's just wait a little bit before you do that. And on your loan, you didn't need to do that. It wasn't a requirement of the loan. So not everybody has to put their student loans in deferment. It just depends on your file. And a lot of times, if you have a high debt ratio, then we'll ask you to do that to lower your debt ratio. But it wasn't needed on your file. And you can call me and we can talk about that more. But you're good, Shirley. You're good. Go find your house, honey. So you're welcome. You're welcome. I hope you're doing good. So. But the thing that, like I said, guys, these are great questions. I really, really like everything that you guys ask me. These are really, really great questions. And I'm always, every Thursday, 7 p.m. Central, we're doing Talk with Angelo. So, hey, Dejois, call me Steve. Hey, Steve, what's up? What determines how much mortgage I can get? What determines how much mortgage you can get is your income, bud. If you do, hey, Angelo, I'm ready to learn commercial and real estate investing, particularly apartment complexes. Yes, we do massive commercial guerrilla investing and marketing and lending with commercial deals, commercial properties. So I'm going to answer, there's two questions there. The first question, what determines what you can qualify for? David Munga, hey David, quite elementary school because of recess. He doesn't play games, he gets shit done. That's right. Yeah, I try, David, my best to get things done. Hey, Chris, I have 3 rentals, LLC, clear title. I have no docs. Yes, we can hook you up, Chris. Call me. We do no doc loans for investors. I could hook you up. You don't need income verification if you're an investor. Call or text me, 832-431-63. I want to hear from you. I love to help investors cash out. Okay? But hey, going back to your question, what determines what you qualify for? If you're doing a conforming loan is your income. Your debt to income ratio determines how much you can go up to, what you can qualify for. So if you want your house payment to be $3,000 a month, that means you can probably buy like a $600,000 house, right? But to have a $600,000 home, you got to be making at least $100,000 a year income, okay? So that's now if you're doing a no doc loan, then there is no debt ratio requirement because we never verify your income. You see, no doc loans, you don't put your income on the application. You leave the income blank. So you don't put any income on the application. It's blank. So that determines what you can go up to. Okay. On investing with commercial, yeah, we love to help you. You know, if you're buying the right market, you can get awesome commercial multifamily loans. 10 years interest only, 30-year loans, interest rate as low as 2% on commercial multifamily. So a lot of great things to invest with commercial multifamily. We do Fannie Mae multifamily, Freddie Mac, private loans, bank loans. You can get rehab bridge loans to give you the cash to fix up your multifamily. We have hard money multifamily loans if you don't have great credit. No doc multifamily loans. You can go up to as big as you want. I did a loan for a client in Tampa, 200 unit. All right, $98 million multifamily deal. Huge, massive, massive deal. So, you know, and then you have people that want to buy a 5-unit multifamily. But if you want to get rich, I mean, I do recommend getting out of the single family and going into multifamily. Multifamily is a great business. If you buy in the right locations, partner up with some great people, pull your capital together. Giorgio, can you expand on the shortness of houses and the higher demand that is going to go on rest? Yes, Giorgio. So, I mean, I don't know where you are, Giorgio, what state or city, but right now there is a shortage of houses, meaning that there's more people wanting to buy a home than the builders are building, or that's what's available for sale. So that's what's pushing the price up of houses, because all of us consumers want to buy a home, and there's not enough houses or inventory out there. And what happens is that pushes up the price of the home. So people, if a house you see for sale for $300,000, they're paying $320,000, $330,000, $340,000 for the house, getting no seller concessions, waiving all contingencies, just so they can close on their property. And that's pushing up. How do we keep up with your loans? Man, we work 7 days a week, Dennis. I don't know if that's what you're asking, but how do we keep up with our loans? I work 7 days a week, man, every day. I mean, I have a whole team here. They work pretty much 6 days a week and nonstop. I work about 100 hours a week. So I don't know if that helps answer your question, but that's how we keep up with our loans. So, but yeah, multifamily. How do you get a no-doc loan? You got to call me. Call or text me. No, you can. So no doc loan means it's no income verification. It's a private loan. I do need sleep. How do I apply? Call or text me. Do you recommend doing construction out of state? Yeah, you can do construction out of where if you find the right lender that will give you a construction loan, go for it. If it's great terms, call or text me at 832-431-6331. We're here open 7 days a week for you. I believe in working hard. I love what I do. I love helping my clients. So I'm not complaining. I love helping you guys. I'm on this show with you. So I'm here for you to help you guys. So thank you, Eddie. Have a good night, man. So anyway, no, I'm glad you guys, you chimed in with me tonight. I really look forward to working with you and helping all of you guys. Thank you, Edward. I appreciate you, man. Appreciate you. You can go to our website, officialangelochristian.com. That's our website, officialangelochristian. We're a nationwide mortgage lender actively helping America for the last 20 years. It's where America goes for funding. Call or text my office, 832-431-6331. We're open 7 days a week for you. We really appreciate you guys watching us tonight. We'll be back again next Thursday, 7 p.m. Central. Talk with Angelo. We're here to help you guys in any way we can to better your life. Whether you want to be a loan officer, you want to get a career in mortgage lending, you need a mortgage loan for commercial or residential, please reach out to me. Chris, I'm out of Texas, bud, but we lend nationwide. Okay, we lend nationwide, but I'm in Texas, but I'll help everybody. Have a good night, Miss Blue. Thank you guys so much. We love you guys. Take care. Stay warm out there. Be safe. Be safe on those roads. Be very careful. If you need anything from me, call or text me. Texas, that's right, Chris, Texas. You guys take care. If I can help with any funding, reach out to my office. I'm here for you. I really appreciate all your support. Be safe. I wish you the best. I'll see you guys next week, Thursday, 7 p.m. Central. Take care and peace out. Thank you guys so much. Have a good night. Bye-bye.